Here's SUI. SUI's back at this level here. We're at congestion before. It's counted down to the 9. We're at 9 out of 13, so another 4 days it would have that as well. But the 9s have worked perfectly every time. 9, 9, 9, 9. They work really well. That one didn't work.
The cryptocurrency market in 2025 is at a crucial turning point. The approval of a Bitcoin ETF, the interplay of liquidity and debt refinancing cycles, capital flight due to the rise of AI, and the accelerated adoption of blockchain by traditional financial and technology giants. Against this backdrop, the market structure is anomalous, with a lack of interest in niche assets, underperformance from successful public blockchains like Solana, and investor sentiment oscillating between extreme optimism and fear. In a program recorded on November 13th, Chris Bernisk and Raoul Pal shared their perspectives on the current market situation. Chris Bernisk is one of the industry's most insightful analysts and a constant source of inspiration for understanding market fluctuations and making informed investment decisions. Chris and Paul have differing perspectives. Chris believes this cycle may have ended, while Paul believes it is still ongoing. Both reason probabilistically, without absolute certainty. Chris possesses a deep understanding of investor psychology, enabling him to design and manage investment portfolios to ensure their longevity and success. Bitcoin has fallen approximately 20% from its peak. In traditional finance, this would be called a bear market, but in the cryptocurrency sector, it's either a slowdown or a much steeper decline. He believes caution is necessary as Bitcoin remains the anchor for other crypto assets. Therefore, there are many ways to analyze this issue, which also makes it difficult to understand. Thus, in the simplest terms, if we follow the 4-year cycle, Bitcoin is currently at a peak. We can expect a bottom approximately 12 months later. This could be attributed to the reward halving, but as Bitcoin's inflation rate decreases, this argument becomes increasingly debatable. Overall, the market began to show some caution after the October 10th crash, as it appeared sluggish. The market started to exhibit anomalies, particularly the fact that Solana failed to generate the expected buying interest in its ETF. According to Raoul Pal, Solana SUI Ethereum are almost at the end of the correction. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
If we think about the crypto market outside of Bitcoin, you'll notice that none of these things have gone to new highs, really. I mean, Ethereum, Solana, none of this has. Why? Because it's driven by liquidity. US total liquidity has not gone to new highs yet, but it will over time because, again, to keep explaining this to you guys, because you don't want to hear me, and you lose impatience, then you go, why didn't it go up? We've got to do this game. We've got to pay for the interest on the debt. The only way of doing it is global liquidity, or is total liquidity. And as you go through, that then lifts that. So if you go back to that chart, there's the hockey stick over time, that longer term version of the banana zone that has to come into play, because if not, the whole system falls apart. So there you go. Now, the last time it shut down was back in 2019. Again, we kind of broke the plumbing of the financial system back then. Once it reopened, so it shut down, the markets didn't like it for the same reasons. The plumbing started creaking. The Fed had to come in, start going back from QT to QE, and also injected liquidity. So here we are. The shutdown's ended. It takes a while before the money starts flowing. So the TGA's only just kind of released $40 billion, but we're expecting like $200 billion or $250 billion over the next 2 months. So what happens then is eerily similar, should stabilize coming few days. I know it feels like it does, but it doesn't. And then the market took off like a rocket ship. Bitcoin is, and crypto is, a macro asset class. That's the important thing to understand. What it means by macro, it's driven by macroeconomics. And macroeconomics, for me, is the business cycle. And here is the business cycle, up and down. We talked about that before. And lo and behold, remember that, the 4-year cycle, well, that was the crypto cycle because it was the debt refinancing cycle. And right now, the ISM is kind of in that middle year where it's not hooked up, not grown. Bitcoin's slope has been frustrating for people. I want this bit. Well, it's going to come in the next 12 months and everyone's going to go, he said that last year.
2021 was also a turbulent year, with Bitcoin plummeting 50% and then experiencing a meteoric rise, a remarkable feat. Bitcoin has lost 20% of its peak, Ethereum around 40%, and Solana nearly 50% since its December high. This correction could be the end of it. A rally from here would be very painful for many. The history of cryptocurrency investing teaches us that true winners are rare, and assets capable of growing over multiple cycles are even rarer. Most of the rest are simply fleeting successes that eventually fade into oblivion. Therefore, in the long run, it's essential to focus on accumulating the assets you believe in most and ensure their trends demonstrate their ability to create value. In other words, the chart should show the ability to maintain higher lows during each bear market and an overall upward trend. The most significant transaction of the last 3 years involved Solana, and the reason is simple: sustained on-chain activity, a thriving developer ecosystem, and obvious opportunities. However, many were left behind, preferring to invest in riskier assets. Today, niche assets are saturated, and the number of tokens is so vast that exponential distribution is no longer sufficient to quantify them. In 2021, Ethereum and Solana were completely exempt from fundamental considerations. However, if we consider the current fee multiple, Ethereum is significantly more expensive than it was in 2021. Ethereum, a more mature and widely used network, can offer a real return per staking of 5% from fees, not inflation. Solana at least 7% and SUI at least 9%. Asset prices will readjust to reflect these return levels. This is the simplest logic. The value of an asset is determined by the return expected by its holders, and these holders are always stakers. Between the 2017 peak and the 2021 peak, Bitcoin only tripled in value, while between the bear market low and the 2021 peak, it increased 20-fold. But the situation is different this time. Bitcoin is currently very popular and might not behave as expected in the next cycle. If it follows a flatter logarithmic curve, the return will decrease considerably. The cryptocurrency market is currently going through one of its most difficult periods, with estimated losses of around $1 trillion. Prices are plummeting, panic is gripping traders, and rumors of weakness among market makers are only fueling fears. While this drop is drastic, macro investor Raoul Pal believes this type of dramatic restructuring has happened before and often leads to strong rebounds. Paul shared a striking long-term chart of Bitcoin, comparing the current drop to the spectacular crash of 2021. Back then, Bitcoin plummeted 56% in a single month, Ethereum 62%, and Solana 68%. Panic ensued. Then, the market suddenly reversed, and cryptocurrencies reached new all-time highs. This was not an isolated incident. Between 2019 and 2020, Bitcoin fell 72% before recovering strongly. Between 2016 and 2017, Bitcoin experienced 7 drops of more than 30% each. But the overall trend remained bullish. Despite the surrounding chaos, Paul remains calm. He explains that he is increasing his positions during his downturn because he perceives a strong underlying trend. However, he notes that risk tolerance and investment horizons vary from person to person.